For the technicals of the market then, we have Ruchit Jain, the technical analyst of equities with Angel Broking, joining us now. Ruchit, hi, good morning. Thanks for joining in. Let's start off first with your view on the benchmark. It's been complete carnage. We've slipped below the 10,000 mark. What should traders do now with the benchmark? Do you think there's more weakness, and what levels do you believe the Nifty could fall to?
Good morning. Yes, we have been seeing the continuation of this low top, low bottom formation as far as the benchmark indices are concerned. In fact, in Friday's session, we saw a gap up opening, and the earlier support of 10,050 was breached with a gap. Now, according to the gap theory, this is a continuation gap since support have been breached and the trend has been continued. So unless we see this gap getting filled and prices moving higher above this gap, the short-term trend would continue to remain down. So 10,105, which is the higher end of this gap, now becomes a very strong resistance for this week. Whereas on the lower side, 9950 is a support which, if breached, could drag the indices further lower towards 9800 up to 9700 range. So the near-term directional continues to remain negative till we are trading about below 10,105. So traders can keep a stop loss below short-term traders can keep a stop loss about 10,105 and trade with a negative bias.
Okay, and Richard, I guess that's the reason why you have two sell calls. Take us through them.
Since the broader trend for the market is still down, I have two sell ideas. Both the stocks have chosen on parameters of the underperformance in the recent past, and also the volumes where the volumes are high on sell-off. DLF is one stock. This stock has breached its 200-day moving average in Friday's session with a gap down opening, and usually whenever we see supports getting breached with a gap down, so that's a negative sign for short term. So one can go short in DLF. This gap should be now your stop losses, so one can keep stop loss about 212 for short term target around 187. And my second pick would be to go short in Yes Bank. As we said, even banking space was the underperformer, and Yes Bank on a weekly chart had recently seen a breakdown from a head and shoulders pattern, which is a reversal pattern on the long-term charts as well. So we expect the continuation of this underperformance, and the sell-off should get continued up to its medium-term support of 273. So at current levels or on any minor bounces, one can look to short Yes Bank, keeping stop loss about 295 for targets around 273.
Okay, Richard, thanks a lot for that. And yes, it's going to be a day in the red, that's undoubtedly speaking. We'll wrap it up then on this edition of Market Cafe. Thank you for watching. Stay tuned. We'll take the market action forward in the market.